Hello learners, today we'll be looking at 2025 paper 2 GCE accounts for final accounts. So before we continue, please like, subscribe and share this video to others. Question 4a reads, the following account balances were extracted from the books of J. Simlayers at the end of his financial year on 31st December 2023. So we have the following balances which are here. So the question is asking us to prepare the income statement for J. Simlayers accounts showing the cost of goods sold, the gross profit and the net profit clearly. That is question A. Then question B is saying prepare the balance sheet. So before we do that, for the list of balances which we have been given, let us look at the additional information that we have. So we have depreciation of furniture was at the rate of 10% per annum. Allowance for doubtful debts on accounts receivables was to be maintained at the rate of 5%. At 31st December 2023, salaries of 3,000 were owing and office wages of 2,000 were prepaid. Office expenses outstanding was 8,000 kwat. Insurance amounting to 2,000 was prepaid. Goods taken for private purposes 6,000 but not recorded in the books. Closing inventory was 60,000. So this is what we have under the additional information. So before we continue, the first thing that you must do, it is to do the workings for all the additional information. But for me, I will not do all of them. I will explain some of them now and some of them later during the tables. So we have, I'm going to do the working for provision for depreciation on furniture and allowance for doubtful debts. So provision for depreciation of furniture. The information is saying depreciation of furniture was at the rate of 10% per annum. So we depreciate furniture at 10% per annum. So we say the provision for depreciation of furniture cost times the percentage which we have been given. This is straight line method. So 20,000 times 10%, which is 2,000. Then the second adjustment which I will do is allowance for doubtful debts. Allowance for doubtful debts on accounts receivables was to be maintained at the rate of 5%. So allowance for doubtful debts is equals to, we charge allowance for doubtful debts on the debtors which we have. So here under our list of balances, debtors is not written as debtors but account receivables. So when you see the word account receivables, it also means debtors. So take note of that. Account receivables times the percentage which we have. So we have 200,000 times 5%, which gives us 10,000. So these are the two adjustments which I want to focus on, and I will explain how each one of them will be entered in the books. We have the following list of balances, in which now we should start preparing the income statement. So as you all know the format of the income statement, we'll not focus that much on the format, we'll just go directly to the answers. So we start with the sales under the details column. So the sales we have 321,000, so we enter that. Then we also have the sales returns from the list of balances, which is 10,000. So you deduct from the sales 10,000, which gives you 311,000, which is called the net sales or the turnover. So you should follow me each and every step I take. Do not skip any part, because it might cost you a lot. You might miss out on something very important. So follow each and every step I take. So we go to the opening inventory. So the word which they have used here, it is inventory instead of opening stock. So take note that inventory and opening stock, they are one and the same thing. It is just another term which is used in account. Inventory, so which is 50,000, we write 50,000 there. Then we have purchases of 150,000. We also have less purchases returns. We have purchases returns, some purchases which were returned costing to 5,000, so we deduct, which gives us 145,000. So under the adjustments here, we have a statement which says goods taken out for private purposes 6,000 but not recorded in the books. So goods costing 6,000 were taken out of the business, but were not recorded in the books. So we need to enter this transaction, and how is it recorded in the final accounts? So the first thing that you must understand is that when you take out the goods, you reduce the goods which you have, you reduce the purchases which you have. So this transaction, it will increases the drawings account will be debited with 6,000 to increase it, and the same transaction will also reduce the purchases from the business. The purchases account will reduce. So here in the income statement we have the purchases. So the purchases, we subtract the drawings which were withdrawn costing 6,000. After subtracting, we should get 139,000. So the 139,000 we added to 50,000, which should give us 189,000 as our total goods available for sale. Then we deduct by the rest the closing stock which we have, which we should have used, which is also the closing inventory 60,000. After deducting, we find 129,000, which is our cost of goods sold. So why have I placed 129,000 in the second column instead of the third column? So under the rest of balances we have warehouse wages. So when you reach cost of goods sold, you should check your balances. You should check the additional information. Wages involving the warehouse should be added to the cost of goods sold. So take note, be able to differentiate between wages from the factory and office wages. Office wages are these administrative expenses, so they are included under the expenses. But factory wages, we need to add it to the cost of goods sold. So here under the details we have warehouse wages costing 20,000, so we add it to the cost of goods sold 20,000 to give us 149,000. Then we subtract from the net sales minus 149,000 to give us 162,000 as our gross profit. To the gross profit, then you add the incomes which you have been given. So under the incomes, you must first check for the incomes in the rest of balances. Then you also check for the incomes in the additional information. Under the additional information, sometimes an income can come out from the provision for doubtful debts. If there is a decrease in the provision, that difference should be recorded as an income. So take note of that. You should do the calculation for the allowance for doubtful debts. So for example, the way we have done it, under our workings, we have calculated 10,000 as our provision for doubtful debts. Then in the previous accounting period, we had 6,000 as our allowance for doubtful debts. So from 6,000 to 10,000, there is an increase of 4,000. So that 4,000 is an expense to the business. But if there is a decrease, that difference should be recorded as an income. So under our incomes here, we only have interest received, which is 4,000. So we add it to the gross profit to give us 166,000. Then we move on to the expenses. So the provision for depreciation on furniture, which we calculated area, should be recorded here as 2,000, which we have done. Then allowance for doubtful debts, we record the difference, not the actual amount which we have calculated. the difference between the previous provision and the current provision. So 10,000 minus 6,000, which is 4,000. Then we have salaries and wages, 30,000. Then under our additional information, salaries and wages, we have 3,000 which were owing. So any owing amount should be added to show the expenditure amount in this year that we have for 2023. So we add 3,000 to 30,000 to give us the 3,000. Under the same year, we have office wages which were prepaid. When an amount is prepaid, it should not be included in the current accounting period, but it should be recorded in the next accounting period, because it should not appear in this current accounting period. You see 2,000 from the salary from the office wages, which we have 2,000 was prepaid. It belongs to the next accounting period, so we remove it to remain with that 1,000. Then we have rent, which is 15,000. We have carriage outward, 7,000 there. We have printing and stationery, 8,000. We have insurance expenses, so there is an adjustment for this one, so you write it in the first column, 12,000. Then under the adjustments, we have insurance amounting to 2,000 we are prepaid. So like I said, prepaid transactions should not be included in this current accounting, so we need to remove it from the insurance expense, which we have 12,000. We remove 2,000 to give us 10,000. We have office expenses amounting to 12,000, and there is also an adjustment here. So the office expenses outstanding was 8,000, so we add 8,000 to 12,000 to give us 20,000. We need to find the actual expense in this current accounting period, so we add the owing, the outstanding, to give us 20,000. Upon doing that, we add all the expenses, and after adding, it should give us 97,000. Then 97,000, that is our total expenses, so we deduct from our net income to give us 69,000 as our net profit. So that is all about the adjustments which we had here and the income statement. So now we go to the balance sheet. We start with the P2 Gce Layers balance sheet for the year ended 31st December 2023. So under the fixed assets, we only have one fixed asset, which is furniture. So you write the cost, you write the depreciation there, so then you deduct depreciation from the cost to give us 18,000. Then we go to the current assets. Under the current assets, we start with the inventory. The inventory which is included here, it is the closing inventory. Always take note of that one. The closing inventory is the one that is included in the balance sheet, which is 60,000. Then we have account receivables. Like I said, account receivable is another term which is used in accounts to refer to debtors. So account receivables 200,000. We write it in the first column. So here in for account receivables, using this amount we calculated for provision for doubtful debts. So we reduce 200,000 minus 10,000 which we calculated. So here you do not enter the difference, you enter the actual amount which you calculated under the adjustments, 10,000. So you deduct 10,000 from 200,000 to give you 190. So take note of that. In the balance sheet, you enter the actual calculated allowance for doubtful debts, but in the profit and loss account, you enter the difference if there was already a provision in the previous accounting. Then we have office wages. Office wages 2,000 were prepaid. So any prepaid amount is treated as a current asset to the business. You prepaid something you pay in advance to someone, that amount is treated as a current asset, so it is included there. Then also insurance prepaid, like I said, it should be treated as a current asset. Upon adding the current assets, you should get 254,000 there. Then we go to current liabilities. Current liabilities, we have accounts payable. Account payable is another term used to refer to creditors, which is 120,000. Then we have bank overdraft as a current liability, which is 2,000. We write it there. We have salaries owing as a current liability, 3,000. We include it there. We have office expenses, 8,000, which is a current liability. You also include it there. If you add the amounts, you should get 133,000. What? So 133,000 kwacha, you deduct it from the total current assets, which should give you 121,000. This 121,000 is what we call as the working capital. The working capital. So from the working capital, you add it with the net book value for the fixed asset, 18,000, which should give you 139,000 as our net asset. So this amount is the balancing figure that we need in this final account. So 139,000 as our net asset. Then we go to financed by capital. To capital, you add net profit, which is 69,000. Capital is 90,000. You add 69,000 to give you 159,000. Add long-term liabilities. We have mortgage. A mortgage is a long-term loan which is taken for building purposes. A long-term loan taken for building purposes. So take note of this one. 10,000, you add it to the capital which you have, which would give you 169,000. So this loan helped your business to function. That is why we are adding it under the financed by. Then the total drawings, we less drawings. The total drawings is 30,000. We already had 24,000 in the list of balances, and under the additional information we had 6,000 which was taken but no records were included. So you add 24,000 plus 6,000, which would give you 30,000. So you deduct from the amount 169,000, which would give you 139,000 as our capital employed. And that is all about the balance sheet. I hope you have understood it and everything I have explained. So I encourage you to take note of each and everything and write the examination year which you would want me to do next in the comments.